Welcome back after the break in our Expert Speak segment. Now I'm joined by Kasturi Sengupta, Executive Director at New India Assurance. With her, we'll discuss some key emerging risks for insurance industry, from geopolitical tension and supply chain disruption to climate risk and the growing role of surety bonds in infrastructure project. Thank you so much, Kasturi ma'am, for joining our Insurance Mantra.
Yeah. Thank you, Anurag. Very happy to be here in Insurance Mantra.
Ma'am, to begin with, I want to understand from you, we have seen the rising geopolitical risk going around. So how the role of insurance and reinsurance is important during these times?
Yeah. That's a very interesting question given now the geopolitical scenario. So see, basically there will be three risks that will be affected. The first one is the marine risk. As you can understand that many of the ships, they pass through that particular area, the Persian Sea, the Gulf of Aden and the Gulf of Hormuz and all those areas. So in the marine risk where we give the world war cover, so that has been really affected. The rates are going up. So marine, if you divide, there are two sections. One is cargo, one is hull. So when you talk of insurance as well as reinsurance, the cover for the hull war risk, that is for the ship. Anything happens to the ship during the war time, right now we do not have any reinsurance protection. Okay. So the General Insurance Corporation, they have withdrawn the hull war risk from 3rd of March, 7 p.m. And the other reinsurers also have withdrawn it. Another 1-2 days, they have already given the notice for cancellation. So this is as far as the hull war risk is concerned. But if you talk about the cargo risk, we still have the war and necessity cover. If somebody has already covered with the payment of the additional premium, so the coverage remains. And here also we have the aviation risk, because the sky is also an important mode of communication. So the aviation risk also remains. So that is not withdrawn. So as of now, no, the insurers and the reinsurers, they're watching the situation. The cargo, there is a cover, marine cargo. Aviation, there is a cover. Only for hull risk, we will see how the situation develops. And then we will see whether the cover can be restored. It will be an optional cover, because many people whose ship, the shipping company, whose ships are not plying in that area, they may not opt for the cover. But the people who have their ships already chartered to travel in that area, they will require the hull cover. So whether that can be provided as an additional risk with payment of some higher loading of premium.
So we have come across the reports that shipping insurance, marine insurance has increased by 5 times to 25 times. So yes. This is just because withdrawal of NOC?
That is because of the withdrawal of the hull war risk cover by the reinsurers.
And for the aviation, there is no such concept?
As of now, no such notice of cancellation has come from the reinsurers. Okay. So we are providing for aviation and for marine cargo, the cover is there. But maybe case-to-case basis, commodity-wise, the price may increase, but nothing interim. If somebody takes a new cover, maybe at a higher price. But whoever has been continuing, the rate and the coverage will continue.
So, ma'am, how insurance industry is adopting these changing risk amidst the geopolitical tensions going on?
So see, insurance industry is very responsive, because as I tell you, I spoke to you about the marine risk. There is another insurance that is very affected when you talk of the supply chain management also, that is the trade credit risk. So what has happened now, the people who already have the cover will remain. The insurance companies have not withdrawn the cover for that also. And the risks of cyber sabotage also is there, because in war, right now, because of the technological advances, we have the cyber sabotage risk also, which is an integral part. Cyber sabotage risk.
New kind of insurance.
New kind of insurance. So in the cyber cover also, we have covered war and with a nominal premium. And I would also like to add that maybe in not that particular sector, but New India has also introduced a specific war cover, because as you know, war is an inherent cover in aviation and in marine. But in property and others, no, there is no war cover. So we have introduced a specific war cover for properties in the border states as well as outside the border states, because see, war doesn't mean land war only. The war can come through your submarine, it can come through a missile, it can come through an aircraft attack, anything. The war is going on in neighboring countries. So India, Pakistan, Afghanistan, the close neighbors, Bangladesh, so Sri Lanka. So India is also very susceptible. So we have a war cover which we are giving at a very nominal cost, which will cover the properties also. So insurance landscape, if you ask, no, it's evolving. New covers are coming up. And see, 2 years back also, war was a declared not desirable risk, and it was an excluded. It was a warranty-wise, it was an excluded cover in all the things.
But now
so
it's
now,
got included.
See, we are giving a standalone war cover. So even if suppose you have a particular property cover from a different insurer other than New India, still the standalone
Just
war
with
cover
a higher premium, you can
with
cover
a
under
cover,
the...
with the add-on cover, you can standalone, you can buy the war cover.
Okay. Ma'am, another risk which are emerging in last few years, net cat events.
Yes.
All part of the country we are
Yes.
seeing cyclones, floods,
Yes.
landslides. So
Yes.
what kind of coverage is required to cover these kind of the risk from these kind of events?
Yes, as you very rightly said, because of the climatic change, a lot of nat cat perils are coming up, especially in the last 2 years. So places where you never imagined that there will be a flood, for example, in the deserts of Rajasthan or in downstream in Chennai, Kerala, we are having extensive floods and property destruction is being there. So right now, because of the climatic changes, one new cover has emerged, which is the parametric cover. So this parametric cover actually is trigger based, and we call it as a Nischit Suraksha. Many insurance companies, they have that cover, but why we call it Nischit? Because when an event happens, that definitively, if it crosses the trigger point, here the insured has the option to choose what the trigger point will be. Suppose the wind speed is more than so and so kilometers per hour, or if the earthquake is more than so and so rate in the Richter scale, or if the rainfall is more than say 200 millimeter in 1 second, like that, no, there is a particular parameter that is chosen. The moment this parameter, it can be wind speed, any of the climatic risk, it can be heat wave, it can be a cold wave, it can be wind speed, earthquake, flood, tempest, storm, anything that can be chosen. Now the moment, no, the trigger point is bridged, the trigger point is mutually decided between the insurance company and the insured. The moment it is bridged, no question asked.
No question asked.
No question asked. Immediately, no, the amount of the money, compensation, what has been pre-decided, will go to the beneficiary's bank account. Digitally monitored, no question of any surveyor being appointed, no papers to be given, no documentation, no delay. The moment the trigger is breached, say the wind speed is more than 10 kilometers per hour, which has been pre-decided, immediately, no, we will not
if
see also.
If rainfall is more than this 200 mm.
200 mm, decided, or 150 mm, whichever you decide.
Okay.
So the moment it crosses that, or the heat wave, more than 48 degrees centigrade, the moment it crosses that, no question asked. Immediately the money, it will go into the beneficiary's bank account. So this is gaining a lot of popularity now, and you'll be happy to know that not only in property, these are being covered in the renewable energy sector also. Suppose the wind speed is less, so the wind energy production will be less. Suppose there is rain, so the solar energy irradiation is also less. So they cannot, the particular solar power plant cannot generate that solar power production, what was pre-decided. So then also this parametric cover will trigger. Recently we have covered a dairy. Because of the heat wave, suppose the cattle, they cannot give the desired production of the milk, then also, no, this trigger will happen, and then compensation will be paid.
Compensation. Ma'am, now I want to know your views on the surety bond. How surety bond is an alternative to the bank guarantee?
Bank guarantee. So as you know, as a program for the Viksit Bharat, a lot of new things are happening. New roads, bridges, tunnels, railway lines, and ports under the Sagarmala scheme. A lot of things are happening. So here, a lot of MSMEs are coming up for oil exploration, are coming up for the coal mining. So here actually, no, earlier the bank guarantee for any contractor, the beneficiary or the person, the principal who is to give the contract, they ask for the bank guarantee to have a collateral with actually the work being given, because they mobilize the advances and others. So bank guarantee, the bank used to provide a letter of credit. At the same time, no, the bank used to keep the same amount as a collateral. So there was actually, no, there was capital available, but the capital was also blocked on behalf of this particular contractor. So surety bond actually is an alternative, because we do not have any collateral. And we give surety bond covers. One is the bid bond, when actually the tender bid is made. So if there is any discrepancy, any failure from the tender person who wins the tender to compromise and to actually to conform to the parameters that he had given, this bid bond gets exercised, or the performance guarantee. If there is a failure in the performance, they are not giving the proper material, or they cannot give up to the deadline, the timeline and all, immediately this can be invoked. So these are given maximum for 5 years now. The rates are very low, and we do not keep any collateral. So there is a lot of capital release. So that is coming as a boon. So earlier, NHAI and NHPC, so all these government organizations, they were not accepting ISBs, that is the insurance surety bond, as an alternative to the bank guarantee. But right now, with the instructions from the DFS and the Ministry of Finance and your RBI guidelines and all these things, so the people are now accepting all these organizations, government organizations.
So do you think that it will be a mainstream financial instrument?
It's going to come up, and now we are going to have a central repository of data also, so that the people will know what is the creditability or the credit rating of the contractor also, which is very important, and also know how many times they have defaulted, what are the projects that are going on their name, how much capital actually is blocked. So all these things will come up to the central repository also. So insurance surety bonds is gaining popularity in the last 1 year, and we are now going to the unexplored areas of coal mining, of oil explorations also. So that is how the insurance surety bond is coming up.
Ma'am, my final question to you, your views on Bima Trinity, how helpful it would be?
Absolutely. This is when we talk of Viksit Bharat, insurance for all, Bima Trinity is the solution, because number one, with the Bima Sigom, we have a marketplace, a digitalized platform, which will provide all the stakeholders in one platform. Bima Bahak is the other name for the woman empowerment. It is for the people inclusion and also the insurance awareness to go, where the women are playing a very important role. And the last one is the Bima Bistar, where actually, if we want to reach to the minutest part at the grassroots level to provide an insurance coverage, so this is the solution, because here you have one product at a very nominal rate, where you have the life, the health and the property insurance together bundled as a one product. So that is the solution for the insurance awareness, for the insurance inclusion, for the financial
solution for insurance awareness.
Absolutely.
And insurance
stability and the economic stability.
Okay, thank you so much, ma'am, for joining Insurance Mantra. So that's a wrap on this edition of Insurance Mantra, but we'll leave you with our Did You Know Insurance Basic. So Bima Trinity is there to achieve insurance for all by 2047. The insurance regulator IRD has introduced a major initiative called Bima Trinity. It has 3 pillars: Bima Sugam, a digital marketplace where customer can compare, buy, renew and claim insurance on one platform. Website is launched and full-fledged platform will be launched in coming days. Bima Vistar, a simple and affordable bundle insurance product covering life, health, accident and property risk. Bima Vahak, a women-led distribution network to expand insurance awareness and reach in rural India. The goal is simple: make insurance accessible, affordable and inclusive for every Indian. Stay informed, stay protected. That's